All right, hello everybody. I hope everyone's doing well. Lots of stuff to get into today. Well, not that much stuff to get into, but like, I would say a decent amount. Let me just tweet. Let me put on the Twitter sphere that I am live. I hope you guys liked my rant yesterday. Oh, there was 19 people waiting? That's legit. All right, hello every. Awesome. That's so dope. I just saw it. I think I start at 9:25 every day. That's way better. It's 5 minutes till market open, so you guys will get the bell within 5 minutes, and I can go a little bit longer till 10 instead of closing right at 10. So I think that's better. It's better. Live United States stock market open. Tuesday. Yeah, let's just do that. Boom. Well, I hope you guys are doing well. I'm excited to be here to spend another morning with you. Just got done finishing recording the Money Talk show, which has been great. Glitch Life, good morning. Glitch Life, I saw your Twitter DM. I have not responded to you yet because I want to give a good response, and yesterday was really busy. Likely will respond to you a little bit later tonight, but I did see your comment. Did you debate that dude on Spotify? You were kind of livid about it. I think we'll debating later. Let me just remind you guys real quick. I don't hate Spotify. I don't. Like, I just think they are not really on the side of the creator. And I think there could be a better audio platform that does that. That's all. But I did see your DM, Glitch Life. I literally just didn't get a chance to respond. Ahad, what's up? Blake, Foundry for Gaming, what's up? Yeah, I got to see that Code Strap interview. I saw it yesterday, but didn't get to watch it. Random thought, what if Elon buys Twitter and start using microtransactions with Dodge? That's not that random. A lot of people have thought about it over the past couple of days. Very possible. I mean, we know Elon wants to pump Doge because he has a lot of Doge. Let's go into Webull. Everything's red pre-market. I mean, there's green, but a lot of it is red. Let's look at Palantir. I actually haven't even checked Palantir this morning before the market opens. Palantir's down another %. So Palantir's down. Tesla's up in the pre-market. All right. I think Tesla, I was talking to someone on my Discord last night about this. Like, Tesla has this weird thing where 1,000 or like 980 to 1,000, that's where it's stuck. And it's beautiful to be stuck in that range because it's $1 trillion company at that range. But it was at 700. They announced that stock split and then just went all the way up. So I think the market wants Tesla at 1,000. That's where the market really sees this company. I mean, I think the market is valuing it as a $1 trillion company. It's very hard for the market to bet against Elon. A lot of the price targets that I've seen are 1,100, 1,200, and even those are seen as conservative. So, I mean, I think Tesla's likely going to stay there at that $1,000 range. I'm still not buying it because it's a little expensive for me. And again, I don't have money to put into the market because I have a startup. By the way, some of you guys emailed me yesterday. If you guys are interested in getting into the startup, emit@dailypalantir.com. Let me know. I'll send you the pitch deck, the information. The round is closing up fast. We just closed another $25,000 last night. It was a pretty good phone call when you end the phone call with $25K in your bank account. So we're at 125K raised, and I think we can get to 500. To be honest, like I think there's a good shot. It's gonna be hard. I want to get to at least 250, but I think we can get to 500. So let me know. We have some really good angels on board. And if you email me, I'll let you guys know who's on board. But some really awesome investors, and excited because June you guys are gonna see me build the company live on my YouTube channel. It's gonna be really fun. You know, it's just exciting to go for it. So it'll be fun. And the minimum investment is like $100 for anyone to invest because we're using a crowdfunding platform. So that is cool. Now, in terms of the market, we are a minute away from the market open. Let's see what happens. Bitcoin is at 40,000. Bitcoin did hit 41 yesterday. So Bitcoin went above 39. And now the market is open. Wake your ass up. The stock market is open. I wonder how my mom feels because she's home this week listening to this. She's probably like, what is going on? All right. We got some green. Tesla's green. Nvidia's green. Coinbase is green. Coinbase should be green because crypto's green. And then we got a lot of red. Snap is red. Ark is red. Where's Ark? All right. Ark's back at 57. Amazon's red. Meta's red. T-Doc. Where's T-Doc? T-Doc at 61 5 years from now seems like it seems like a good buy. I don't know that much about T-Doc. Me and Chris Patel did a video about it a while ago on his channel. But T-Doc's an interesting one. Google Google's down a little bit. Nothing too crazy. AMD, I'm trying to get at 80. I feel like 93 still, not that it's expensive, but like if you get it at 80, I mean, why wouldn't you? Netflix is the big one. Netflix has earnings coming out today. I am very curious to see what goes on with Netflix because Netflix is one of those mystery ones. Just catching up on the comments right now. Emmanuel, what's up? Michael Ray, what's up? Matt Money, Emit Prince, on my way to work to use Palantir. Yo, so Matt Money, you guys have seen him in a previous stream. He works with Palantir at his job. He does like petroleum engineering. I'm gonna get him on the channel probably within a week or two to talk as much as he can talk about Palantir. So it's going to be really exciting to hear from someone who actually uses it. He's a big fan of it. He loves it. So really excited to hear him and his thoughts. We just got a new Patreon. That's awesome. Corrado Lucchini pledged $5. Thank you so much, Corrado. Really, really means a lot. Welcome to the Discord and happy to have you here. Patreon is in the description for anyone. All right. So Netflix is going to be interesting. Netflix has to get, I believe, above 3.5 million subscribers in Q1 of 2021 for analysts to not kill them. If they come in at like 2 million subs, oh boy. Oh boy, it's not going to be pretty. It's not going to be pretty at all. Namir says Tesla's the next Tesla. Changed my mind. Yeah, that's true. Tesla's the next Tesla. Rachel, thank you for being in the chat. She says, hey, Amit, please to make a live market open. Rachel, I saw your comment about Tesla on the Spotify video. I will respond to it a little bit later today. So what do you guys think? Does Netflix beat expectations? Let's actually look that right now on Google right now. Let's see what people are saying. Netflix subscriber expectations. What do we got? Netflix jumps. Okay, here we go. Earnings preview. Why is this on the Hollywood Reporter? Is that because Netflix is like Hollywood movies and stuff? Interesting. Okay. So they had a disappointing first quarter user growth set of net adds of 2.5 million, down from 4 million in the same period of 2021. Analysts have highlighted that Wall Street has ramped up focus on increasing spending on content. So that's kind of the problem with Netflix. We believe expectations for first quarter net adds are 3 million before Russia, or around 1 to 2 million plus post-Russia. Okay, so before the Russia-Ukraine, analysts at JP Morgan were saying Netflix will get 3 mil. Now that it's after Russia, they're assuming 1 to 2 mil. That would be interesting. So the Russia thing is a little bit of a hedge. So if Netflix comes in at like 1.95 million, I mean, they're going to get hurt, but I don't know if they're going to get that hurt. If Netflix gets to like 2.4-ish, they're probably going to stay neutral because analysts are giving them some leniency around the Russia-Ukraine. Cohen's John Backage, who has an overweight rating and a $600 stock price, blah, blah, blah. In the report itself, he noted, we now expect net adds of 1.45 million below guide of 2.5 million given Russia's suspension. They were suspended service in Russia. I forgot about that. That's true. So, the 2.5 is what management guided for. That's when the stock went from like 700 to like 350. But because of Russia, they suspended. That means they might only bring in 1.45 million subs. Interesting. Michael, what do you make of Audible? Michael, you're in my Discord, so you can message me privately, and we'll talk about that as well. Audible, I see, again, is a premium service. Audible charges $15 a month and then charges money on top of that to buy the book. I don't see it as a search engine for audio or a place where creators can get discovered because it's not like a social network. It doesn't have network effects. It's just a place to buy books in audio format. That's it. Interesting. So Netflix is going to be really interesting. Right here, they said overall its net additions project falls to 1.7 million to 2.48 million. Solid download data in Southeast Asia and India. Netflix has lowered their prices in India to try to gain some more market share. India is competitive. I know this because I'm Indian, and the amount of Hotstar that exists and the amount of India creates I think it was 1,200 films a year in Bollywood. It's insane. And the amount of content, pure content, entertainment, informative, etc., that exists in India is there can be a Netflix of India inside of India, and there already are many other Netflixes in India. Now, Netflix has done a good job of licensing a lot of content, so the iconic Indian films that you guys probably don't know the name of, but Kabhi Khushi Kabhi Gum, Mehuna, all these things, Netflix has rights to those, which is awesome. But Amazon Prime also has a lot of those. India's a very competitive market. And then YouTube is in India. I mean, YouTube has 440 million, I think, monthly active users in India. Like, and YouTube has 2 billion worldwide. So like India is a huge percentage of YouTube. So I mean, India is a really big place for competition. But that's interesting to see what will happen with Netflix. I've never been bearish against Netflix, but I'm not bullish against Netflix. Because at the end of the day, when I see streaming competitors, I'm just like, I don't know. I don't know if that's the right word to go. Michael says, do you think Audible offers much to the audio space? I think it offers much to the people who want to listen to audiobooks. I don't think it offers much to the random podcaster that's trying to get discovered. Like, I don't think Audible does anything for them. Because Audible's not for them, right? That's not what the platform is. And I see Spotify going way more in the route of an Audible, of this premium route, versus creator discoverability, which is more like YouTube route. So that's sort of the disconnect I see there. Ethereum back above 3,000. Bitcoin above 41,000. Tesla does have earnings tomorrow on 420. I forgot about that. Thank you for that comment. Tesla has earned. What do you guys think Tesla? I mean, I don't know. I think Tesla has tried to jump above 1,200, which is its all-time high many times. I do not think earnings are going to push it above 1,200. I think the market is way too depressed. Let's go to SPY. I think the market is way too depressed right now for earnings to like carry a stock. Because you got to remember, Tesla is a big part of the S&P. If Tesla gets to 1,200, the S&P has got to go to at least what, 445, 446 in a day. That's asking for a lot. I mean, I don't think the market is ready for that yet. Not yet. Maybe in a couple months. Maybe when inflation goes down, supply chains get better, which is the macro stuff, right? That's going to help everything. But it's going to be interesting to see how that turns out. Block or Coinbase? Block. I would say Block. Because at the end of the day, I see Block as more like financial services. Coinbase is just like a crypto exchange. And I mean, Coinbase also is getting rid of their fee structure. I never got Coinbase because like they take a percentage off of every. So if a Bitcoin is 69,000 and they take 5%, that means they take 5% off 69,000 to transact your cryptocurrency exchange. That's not sustainable to me. Consumers do not want to pay for that. So I never understood that strategy. Amit, do you know how to speak Hindi? Ha, mere ko pata Hindi kaise bolna. I sound like an American when I say it, but still I do. I would say Block for sure. Tesla's earnings could be 1 trillion and Elonites would still buy. Yeah, I mean that's just how Tesla is. Open Door, $8, still at $8 on Open Door, nothing too crazy. Uber at 32. Now let's go to this article by the Fed for interest rates. Bullard. They were saying, yeah, look at this. Bullard, which is one of the most hawkish people on the Fed, is saying that they want to get rates up to 3.5% by year end. U.S. inflation is far too high, James Bullard said on Monday. What we need to do right now is get expeditiously to neutral and then go from there. So his argument is like, look, we need to get rid of inflation. We need to raise interest rates, get to neutral, and then we'll get back to normal. But with economic growth expected to remain above its potential, he added the economy won't fall into recession and unemployment rate, now at 3.6%, will likely drop below 3.3% this year. Again, this is interesting because if we raise interest rates, you're supposed to create more unemployment, like you're supposed to set up a recession. So the Fed is playing a very tricky line with, are we going to trigger a recession if we create interest rates going higher? Additionally, I mean, interest rates higher means the Fed has to pay more interest rates on the debt, the national debt that we owe. And I think for every 1%, it's like another $200 billion that it's like a lot of money. So, I mean, this is why Kathy's argument is like, look, you don't got to do this. Just let inflation and supply chains cool off. The problem is it's almost June, and she's been saying this since December. And in December, it sounded like a phenomenal, like that first In the Know that I heard, bruh, I was listening to it like, yo, this woman is a genius. That's when she was buying Palantir, by the way. As soon as she sold Palantir, I was like, wait a second. This supply chain inflation, nothing's changed. It's been 5 months now. I'm just kidding. But like, I mean, that's her argument that it's transitory. And she still believes it's transitory, right? She's not gone away from that thesis. The question is, are supply chains actually going to stop the transitory nature of it? There is another good thing, Shanghai ships. There was this photo of all the China ships showing all the ships. Yeah, I think this might be it. All the ships that were delayed because of the Shanghai lockdown. I don't know if I can find the photo again, but it's a lot of ships that are stuck at bay, and it's rough right now. I forgot when are earnings for Palantir. I believe earnings are around May 10th. That's when earnings will be for Palantir. QQQ would also be a good indicator for tests on other tech growth stocks. That is very true. Our cases, that was the most American Hindi accent. I can be more Hindi. I just don't, like, you know, it's a little bit harder. But I also do have an American Hindi. I'm not, because I don't speak it often. I don't speak it at home. I speak it only with my grandparents. So whenever I go to India, I do sound like super American. Bro, they be trying to hustle me, bro. Because, like, I could tell the guys at the store, they know that I'm American, even though I speak Hindi. And they be charging me a little bit extra. But I'm okay with it, because I can afford it. And, like, to be honest, in India, in India, bro, I took $5, and I got, like, an hour-long face massage and haircut. I mean, for $5, I can't even, like, step outside without, like, inflation losing my... Like, in India, you're rich with $5. Like, it's actually insane. So, I always love going to India and having some money. I also like giving a lot of money away in India, bro. Like, I like giving big tips in it because, like, the people there... I mean, you look at small businesses in India, it is just the amount of work that... It's just different, bro. It's just so different from America. There's so much money in America. So much opportunity, and there's too many people in India, which means opportunity is less, which means people have to do crazy jobs, and, you know, it's just a different environment. Which is why, if you're in America, at least you got to be grateful for... And, you know, America's shitty. There's a lot of... But at least you got to be a little bit grateful for being here and having opportunities. The crypto exchanges that are free are screaming you in the spread. Nothing is free. Okay, D. Williams, I agree with that. But the problem is, like... Number one, for consumers, the reason they go to Robinhood is because they don't see the transaction. So as long as they don't see it, that's sort of my argument in terms of user growth. But number two, I still think them screwing you on the spread is way less than charging a literal 5% fee on, imagine if Bitcoin's 70 grand and you want to buy like 1/4 of a bit. Like, that's a lot of money on the fee. So, I mean, even if they're screwing us on the spread, I think it's still less at the end of the day. I could be wrong about that. But that's why Coinbase was... That's why I always picked Robinhood. I was like, I don't want to buy on Coinbase. Like I just don't want to pay the fee. And regardless of whether I'm right or wrong on that, consumers are not going to pay the fee in the future. People are not going to... With all the cryptos that exist, people are not going to buy crypto and have to pay a fee to buy it. Just like stocks, right? Like, that's just not how things work. Tattooed Chef, $10. Tattooed Chef is getting hit... pretty badly. It's not recovering too well. I know this is a Jeremy favorite. I guess we're going to see how this one goes. I mean, he obviously believes that there's something big here. So I guess we'll have to see it play out. The macro is not friendly to any of these stocks. Palantir up 1.1% at 12:30. Looking decent. Careful in New York. You got a crazy guy walking around. Yeah, man. New York, the subway shoot. That was kind of wild, bro. I had a friend who goes to NYU, and she was afraid to get on the subway because it's just, like, scary in New York, man. It's pretty scary there. 30-year mortgage is already hitting high 6 and low 7s. Yeah, that's insane, Chris. Like, that's insane. The fact that the 30-year... Let's actually go to an article on that. I got to read some stuff on that. 30-year mortgages. My parents just bought a house in December 2020, and I think mortgage rates were like 3% or lower. This is not good. This is not good. Here we go. Today's 30-year mortgage rates climb. 3 other terms hold. Wow. This is quite fascinating. So yeah, I think my parents bought it when it was below 2%, because if it was at 3% in 2022 March, we bought it December 2020. Yeah, it must have been way lower. I mean, I don't remember the exact amount they bought it for, but it must. We bought it right during the year of the pandemic. That means we probably paid like nothing. Like, it was probably horrible interest. That's why we bought it. I mean, that's why my mom was so eager to buy a house during that time. With rates for 30 and 20-year terms sitting well above 5%, which is what Chris said, home buyers who want to save the most on interest rates might look to shorter terms. Rates on 10-year term, which is the shortest, are full percentage lower than 20-year rates. Shorter terms do come with higher monthly payments, but buyers who can swing those higher payments stand to save more on interest. So basically the way interest rates work, from how I understand them, is you get a 30-year, you have 30 years to pay off your mortgage, but you pay a higher interest rate because the bank is giving you more time to pay it off. If you get a 10-year, your interest rate is lower, but you have a bigger monthly payment because you have to finish the let's say $250,000 in 10 years versus 30 years. But you have to, because if you're able to afford the monthly payments, you can get it over with. If you're not, then you need a 20, 30 year. Now, most people that want to buy a house would want a 30 year because it gives them 30 years to pay off the mortgage if you're not paying it in cash. But the problem is if the interest rates are that high, I mean, you're paying a crap ton in interest just for a 30 year. So it's like, this could theoretically, right, if we're being just like pure naive about real estate, I'm not a real estate expert, but pure naivete, does this crash the market? Does this crash the market at that point? All the people feeling lucky for buying a home at 2.7%, enjoy your golden anchor. Yeah. I mean, so the question is, does this crash the market? Because if people aren't buying real estate because these prices are crazy, is there a realist? I mean, I don't know. I got to do more research into real estate, but very interesting. It's I mean, it's interesting to think about what might end up happening. Let's go to CNBC. There was another crypto hack the other day. Oh yeah, we got to talk about this. Apollo Global Management. We talked about this on Money Talks today. They are willing to finance a Twitter buyout, sources say. Private equity firm Apollo Global Management will consider providing financing for Twitter buyout in the form of preferred equity. Apollo, by the way, was the name of the first mission to go to the moon, and apparently they're trying to take Twitter to the moon now with Elon Musk and SpaceX, which is also trying to go to the moon. Wow, I could have had a better transition on Money Talks. I made that transition, but I forgot the SpaceX part of it. That would have been a triple entendre. Damn, that would have been good. I forgot to mention SpaceX in there. Wow, that would have been good. That would have been dope. All right, so basically, the board is going to reject Twitter's Elon's offer. So Elon's like, all right, what if I get a private equity firm that is known to buy underpriced assets? Apollo Management actually bought Yahoo, if I'm not wrong. Apollo Global Yahoo. Yeah, look, Apollo Funds complete acquisition. I think it was $4 billion, right? So September 2021. They've completed the acquisition of Yahoo, formerly Verizon Media, one of the blah, 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 blah. Verizon has retained a 10% stake in Yahoo. Yeah, right here. With nearly 900 million monthly. This is what I said on Money Talks. They have 900 million monthly active users. Don't forget, Yahoo, as much as we make fun of it, bruh, Yahoo still gets people coming. Owen says, crowd puts my prank. Owen, aren't you down on options? Why are you playing with options? I saw your screenshot in the Discord. Oh, never mind. Yahoo gets 3.6 billion people. Sheesh. 3.6 billion. Let's put that into context of Reddit. How much does Reddit get? This is by the way, this website is called similarweb.com. I recommend just playing with it because it's a fun website to see the stuff. Reddit gets 1.7 billion. Yahoo gets more engagement than Reddit. Think about that. Next time you say Reddit is dead, think about that. Yahoo.com, this website right here, gets more monthly active visitors than Reddit. Now, the engagement on Reddit obviously is better. I get it. But, like, look at this. Yahoo over Reddit. That's pretty amazing. Now, I am not an active user of Reddit at all. Do you guys use Reddit? Like going down this feed, I never found this stuff to be interesting. I come to Reddit if I have to find some information or something. But, like, I never thought Reddit was, like, super... I mean, there are some rabbit holes I've gone down on Reddit. But, like, you see this trending today, I would never click on this stuff. Like, this stuff isn't super interesting to me. I never even post my Palantir articles on Reddit. Reddit's interesting, man. Yahoo gets 3.6 billion, though. We can't front on Yahoo. Because of Yahoo Finance? Yeah, I mean, Yahoo Finance is probably a bit... Well, let's see. Finance.yahoo.com is its own website, right? Let's see how much that gets. Finance.yahoo.com. Owen, I've been saying Yahoo's underrated. Owen, you always say something's underrated, bro. You're a bandwagon. You try to hop on it. So, Finance Yahoo gets 273 million, but Yahoo gets 3.6 billion. So, Finance Yahoo isn't even the biggest part of Yahoo. In fact, I think that's independent of Yahoo. Well, it's .yahoo.com, so it might be the same. But even if that's out of 3 billion, that's a lot. Never used Reddit. Yeah, a lot of people in the chat don't use Reddit. Reddit's never been that interesting to me. I mean, like, it had, like, so for example, I love the rapper Drake. So I found a bunch of people I've found a bunch of like subreddits around Drake, and like I found some conversations there that are interesting, but I've never like super gone deep into it. Okay, let's see what's on Bloomberg. Or actually, let's go to YouTube. Let's see a CNBC, what they've been posting. Let me get rid of some of these tabs because it's slowing down the compute on this $1,600 laptop. CNBC. Oh, let's actually go to Justin's stream. Let's watch Justin's stream for a second while we're watching my stream. What is he talking about?
Or under 4%. That means that the Fed doesn't need to aggressively hike rates and actively blow headwinds to the economy. And
okay, so Justin's talking about finance stuff because that's what Justin does. Finance. Oh wait, blockchain.com. I saw it. Blockchain.com IPO. I saw that as a headline. IPO. What? Blockchain.com IPO. Oh, let's read this. Blockchain.com could IPO as early as this year. $14 billion valuation. Yo, if crypto turns out to be a massive scam, like all these companies are going to just go down the drain. Because like you can't IPO and crypto's a scam, right? So this proves to me that crypto just can't be a scam, bro. Like you can't have these many IPOs. You have FTX, you have Coinbase, Crypto.com, Blockchain.com. Damn, let's go to Blockchain.com. Blockchain.com. The world's most popular way to buy, sell, and trade crypto. Since 2011. Interesting. The IPO might not happen until 2023. Blockchain is one of the largest, blah, blah, blah. It's $14 billion Series D round. Wow. That was a lot. Bally Gifford participated. Ah, interesting. Very interesting. All right, let's go to a CNBC video. Let's watch something. Well, we had Tom Lee come on the other day. I would like to see his thoughts. I haven't watched his video yet. Yeah. Let's see what Tom Lee has to say. Let's get into that. It's a 3-minute video, and we'll see his thoughts.
Another headliner, Tom Lee, who says it's no surprise stocks are struggling recently, and Uncle Sam is to blame. He joins me now at Post 9. It's all Uncle Sam's fault, tax day, and then everything's going to be cool?
I hope things get better, but yes, this year, April 18th is tax day. It's an extraordinarily big tax hit. We calculated what we estimate Americans owed. It's about $828 billion, excluding crypto. Crypto is probably another $125 billion in taxes owed. So about $1 trillion went to Uncle Sam today.
And no, but you think literally like you get today out of the way, and then there's a noticeable and notable impact in the market?
Yes. We looked at years where the market was strong. The 2 weeks into tax day, our markets are weak. There were a lot of folks caught off guard because they thought they had until October, and of course they don't. They have April 18th. So there was a bit of a frantic push, and hopefully this takes away indiscriminate selling.
So Tom is saying, like, the fact that so much money had to go to taxes is about $1 trillion, just from Americans, not from corporations. That put less money into the market, right? So, for example, I just paid my tax bill yesterday. I looked at my bank account and it was deducted. And there were, some thousands leaving my bank account. Those thousands cannot go into Palantir stock. That's the change. Now, why is that a good idea? For me to not put my money into an American company, but to put it into an American government. Because we all believe that there's a good trade-off with that money going from a company which could promote growth and jobs and economic prosperity to a government, because the government can use whatever thousands I paid and they can put it into public infrastructure and roads and bridges and healthcare and public teacher salaries, all that stuff, right? That is the world we live in right now. So I'm okay with that because I went to public school. I understand that taxes have to pay for that stuff. I'm not super libertarian in that front. I do think, I just wish there was more transparency behind where taxes are going. Like if I'm paying $10,000, it would be nice to just know a percentage breakdown of where that $10,000 is actually going versus just giving it to the government and letting them do whatever they want to do. I'm not anti-tax. Taxes are important, but I think it would be nice to kind of see where it's going. So Tom's argument from a macro perspective, and again, he's a macro guy. He's not analyzing like the DCFs of a stock. He's analyzing like this stock is in this sector. How is this sector reacting to the macro, inflation, supply chain, interest rates, etc. What does that mean? And his argument is that the passing of the tax day leads to indiscriminate selling. Why is there indiscriminate selling? Because you have to sell your stocks if you have to pay taxes. So for example, one of my friends, he had a 20K tax bill. He might be watching this if he's from Texas. And he's actually thinking of investing into my startup, and he wanted to make like a $5,000 investment into the startup as like a small angel check, but he has to pay his taxes, right? So he's like, I can't get you this money till May because like I literally need to sell bonds and stocks to like pay my 20K tax bill. So it's like stuff like that, right? It's stopping him from investing currently into other assets because of taxes. So there is a macro argument that if you get rid of taxes and you get through this period, the market is more prime for money to come in because now people have the money to put into the market.
Okay. We have to discuss this tweet of yours where you agreed with somebody. And honestly, I saw this over the weekend. And I was like, what? I was like, what is Tom talking about? So I came into that. I was like, we got to get Tom Lee on. A gentleman by the name of John Carter tweets the following: the increasing shift out of financial assets into hard assets will soon turn into a panic move. And you said agree 100. And I'm like, wait a minute. Tom Lee comes on the show and he's bullish and he says the lows are in for the year, and now you agree 100 that there's going to be a panic move out of financial assets. I'll let you explain how that makes sense.
Yes. Well, because not all assets are equities. There's a lot of financial assets that are terrible inflation hedges. Americans today own $55 trillion worth of bonds, and they are going to get their quarterly statements. Bonds are down 7%. 25% of all 10-year periods since 1880, bonds have had a negative realized return. We're probably entering another decade. So there is going to be this, we believe, a panic out of bonds. It'll go into income-generating real assets. And a big chunk, we think, will be TINA, which ends up in the stock market. So I don't think people are going to sell stocks to buy real assets, but they probably will sell a lot of bonds.
So you're talking specifically about the bond market and money coming out, because it doesn't say that. When I read this, I was like, what?
That's right. And I probably intentionally left it a little vague just because, it's the weekend. I was having a little fun.
Okay. You knew I was going to call you and be like, what in the world is this? In all seriousness, you do have people suggesting that there is an alternative, that TINA's no longer TINA, that maybe bonds are an alternative to stocks.
Yeah, I mean, it's getting to be very tricky now because we have inflation that is quite elevated. We don't know if it's going to cool. Hopefully, that's our base case, that it cools. And we know that bonds yields have moved to a level that people might want to actually own some bonds. But the reality is if rates do creep up, so we have positive real rates, meaning, the 10-year goes towards 4 or 5, anybody who owns that $55 trillion bond complex is going to lose another 10%. So you're talking $5 trillion of realized losses if people don't rotate out of bonds.
All right, that's interesting. Let me know if the volume's good now, guys. The volume should be pretty good. I thought it was good on my end. That's weird.
Trivariate's Adam Parker is here with me.
So what Tom is saying is super, super interesting, sort of about the bond market. And TINA, right, like sort of like the best alternative. His argument and most bulls' arguments are stocks, right? That like there is not the best there is no really other good alternative outside of stocks, which is why people are going to sell off bonds to be able to put their money into stocks. Now it gets interesting because if bond yields get higher, it brings up a discussion or a question of how much are people going to be willing to sell their bonds over their stocks. Okay, yeah, I'm listening to the volume. The volume should be good. Let me know if the volume's bad. But like that's kind of the point, right? So Tom's argument is that there is a very, very good chance that there is a better bull market because there's not really other good assets to put your money in. And even with inflation and supply chains being bad, which they are bad, it doesn't justify people selling a lot of their stocks to put it into other assets because those other assets aren't even getting you a good return in the first place. Now, we're going to see what happens, right? That's the question. We're going to see what happens. And, it's going to be interesting to see, but I don't know. I mean, like, I want to agree with Tom Lee here because his argument is very logical. He always sounds logical, and he's been right the past he's been right about a bull market. We haven't really entered a bear market. I know we've had a crash, but it hasn't been like S&P at 3,800. In fact, let's check the S&P right now. Oh, Palantir is up 1245, not bad. Palantir is hanging in there. S&P's at 440, right? So, I mean, the idea that the S&P gets to 3,800 and we have a true recession, it would have to be a pretty dramatic crash for that to happen. Tesla's at 1,020, by the way, or 1,017. So, like, for that to happen, it would be rough. It makes sense that his argument is, like, people don't have a better alternative to put their money into. Tax day is over. Bond yields are not as attractive. So, at that point, you know, stocks are where you put your money. And again, he's talking about it from a macro perspective. On the macro level, where is all of this money going to go at the end of the day? So it has to go somewhere, right? People are not going to let it die to inflation. So where does it go? Yeah, Tina means there is no alternative. So if there's no alternative to stocks, then you put your money into stocks. There's because of Tina. And I found out about that like 2 weeks ago. So don't feel bad if you didn't know what that was. I just found out about that as well. So if there is no alternative, people put your money in stocks. I mean, like, do you really not want to put your money in Palantir, right? Do you not want to put your money in Tesla? Do you not want to put your money in Disney? Like, these are phenomenal companies. At the end of the day, they're going to grow. They're going to be big. And unless the economy has a dramatic recession, people are still going to want to put their money in those companies. Because where else are you going to put it? That's the question. Where else are you going to put it? You said DeFi says, I also hear a lot say no recession is coming. I guess we'll find out. Yeah, someone like Tom Lee does not think a recession is coming. It could be, you know, we might not have extreme growth, but we might not have a recession either. We might just be flat, to be honest, for the rest of the year. So, I mean, it's going to be interesting. It's going to be real interesting to see what happens. We had our little recession for like a day in 2020, that day when Trump went on. I was driving home from college. No, I was driving home from work because I worked during college, and I worked like an hour away from campus. And I was driving home, and I turn on the YouTube, and I see Trump on YouTube talking about his live streaming, talking about, you know, this is really serious, blah, 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 blah. The NBA game got canceled that day. When the NBA game I was like, the NBA game got canceled? Like, what's going on? And, you know, that the next morning or the next week after that, we had, like, our crash. But then that crash went away immediately. So it is very interesting. We're going to see what happens. Roku's at 112. Roku has not recovered at all. Roku has been hit pretty badly. Let's see what Ark is buying. There's a Twitter account that tracks this stuff. By the way, if you're not following me on Twitter, at Amit is Investing, make sure to follow me. It's a good time. Ark Invest Daily. Okay, what did they buy yesterday? This is all they did. They bought Ginkgo Bioworks DNA, 602,000 in Ark KK. They bought 31,000 in Ark G, and that's it. So Ark did not do a lot. What about on Monday? Or 414? 43,000. They bought another Ginkgo Bioworks, 619 grand. How much? Goodness. Let's go to their holdings. How much Ginkgo do they have? Ginkgo Bioworks. Oh, there was a new Kathy video that came out the other day that we should talk about as well. She was basically talking about how she's performing better than other managers. I'll pull that up. And she's like, look, Ark is a hedge against other managers, so like she doesn't know why people are freaking out. It was actually kind of funny. She was like, fam, we're a hedge against like boring stocks. That's why you should have not minimal, but you should have some exposure to growth. If you give us 5 years, we're going to give you some good returns. That was her argument. She was like, I'm so tired of this stuff. She's like, just shut up and relax. That's basically what she said. They have 42 million shares. Oh my goodness. But see, this is the problem with Ark now. They had 34 million of Palantir. 37 million shares of Palantir. Because I remember when they sold off 3 million, I remember they had 34 million left. So I can't trust her. You can't have 37 million shares and then go down to 0 and then want me to get excited when you have 42 million. Like, because her strategy is like, oh, you know, I'm going to buy so much that people are going to start buying it with me because they think I'm this like messiah, this saint, this genius, and they're going to follow me, which is not the worst strategy in the world, by the way. I mean, it's just marketing. It's influencer marketing at the highest of levels, and it worked for a lot of people. But I don't trust her anymore because she did this with Palantir. She had damn near the same amount of Palantir shares, and then she sold all of it. How do I know she's not going to pull the same on Ginkgo? How do I know? Chris says, unless people start going back to work, inflation comes down and interest rates stabilize. We're in a high volatile limbo. Yeah, I agree. All right, let's go to that Kathy video. It was literally, here we go, 18 hours ago. All right, so let's listen to this.
It is confusing sometimes to hear people, critics say, you know, there's no risk management. We have risk management throughout the firm. We have minority owners who are overseeing the risk in the firm. So we are looking at Ark as a slice of an equity allocation. And we have a study on our site, Ark Invest, which shows that if you allocate, I think the study was 5 to 15% to Ark, take that from other equities, we will, over a 5-year period of time, increase your return per unit of risk. And that is why over the last 5 years, we have outperformed when most active managers have not. We have outperformed the NASDAQ. And
so again, her argument is that she's going to outperform based upon the risk assets that she's in, and those risk assets are going to allow fund managers or funds that have exposure to Ark to outperform stocks or like indexes that only have Google or Facebook or Amazon or etc. So like she's kind of, it's a little bit changing of the narrative. She's kind of like, look, like you don't got to go all in on us, but like if you want exposure to growth, we are giving you exposure to the most speculative growth parts of the market that obviously Ark's research believes is not the most speculative. They believe it's actually it's deep value. And that's sort of the argument there. By the way, guys, we have 176 people, but 23 likes. Can we please get some likes? I would appreciate it. It helps with the algorithm. All right, back to the video.
And the S&P and the MSCI. So I agree with you that you know what I call tried and true, the core. Many people treating Ark as a satellite. I think many people are, and as a hedge against the massive disruption that we see from innovation during the next 5 to 10 years. It's going to hit some of the stocks in traditional benchmarks.
It's amazing how much engagement you're able to get. I think you and your colleagues together have like 1.7 million Twitter followers. And then you've got on the other side of the coin, this sort of legacy active where they don't, the PR people and the lawyers don't let them say anything. And if they do, it's very by the book and it doesn't really get anybody going. Nobody cares. I will say though, I think it's good. I think it helps your brand, but sometimes you'll say something and I'm like, why did she go that far? For example, the 40% return. Sometimes you'll throw out a number. I'm like, why set the bar that high and maybe upset your compliance person? Like, I think people are with you. Because don't you want to under promise and over deliver?
So.
Okay, so this is an interesting question, right? The guy's like, look, you say some outlandish stuff, which he's acknowledging. He's like, look, I know you got to say this. I know you're marketing. But at the end of the day, you've got compliance people that, for example, you can't offer these like forward-looking statements. That's why every company gets super scared to say something because they think they're going to get sued. Because then, a retail investor will be like, well, you told me the stock price was going to 50. That's why I bought it. That's why everyone on YouTube says this is not financial advice, all that stuff, right? So like, it was interesting because he asked her, he's like, so how do you deal with this idea of being a rock star fund manager and saying all this stuff, but then also all these other ETF managers, they don't say anything because they're so afraid to deal with this stuff. And it's actually interesting to hear a response. Chris in the chat says she rode Tesla to success. What other stock call has she gotten right? That is true. I guess we're going to have to see if she can get another one right.
Well, in the beginning, we wanted people to just listen to our story, so maybe that's part legacy. But our chief compliance officer spent 4 years at the SEC as they were evolving guidelines for social media and marketing. And I started the firm saying, okay, after 0809, what did clients want? There was a loss of trust in the financial services industry, so transparency seemed to be very important. So that was, I invested much more in marketing at the very start of the firm than most would for this idea. In terms of the putting numbers out there, what we try and help people understand is the other side of what you said in terms of our return expectations based on growth, based on our research, is we're also and people don't pick up on this as much, we're also saying these expectations are with an assumption that our multiples are going to compress dramatically. So I think many people are surprised to learn that Tesla's EV, so enterprise value to EBITDA expectation, our expectation in 2026 is 14 times. It's below a FANG today. Now, do we think it's really going to be there if autonomous takes off? No, we don't. But where you do see aggressive assumptions, and this has to do with exponential growth revolving around Wright's law, Moore's laws relative, we have a high degree of confidence in the unit growth characteristics as these technologies go mass market. And we're really trying to communicate that. These technologies cutting across sectors are creating explosive opportunities.
So that was interesting. So she said the EV enterprise value to
Physical
EBITDA,
gold is the only independent.
would be less than FANG multiples right now. It would be at 14, which is pretty interesting, right? To think of that, because if you think of a stock like Tesla, like it probably shouldn't. But again, the bet is if autonomous takes off. So that's kind of the interesting argument that she's making there. That the argument she's making is that our valuations are not insane. Like, so the answer to the compliance question was like, look, we're not promising that much, because if you look at our numbers, we're actually promising valuations that are fairly conservative. We just believe that because these stocks are so beaten up, even our conservative estimations are going to not seem that conservative once they actually blow up, because at that point, when they blow up and, you know, the market's looking for getting exposure to growth and Ark is the only place that has that exposure, the market's going to, you know, pile a bunch of money into Ark. That is the argument that she's making. Now, will that happen? I don't know. But it'll be interesting to see that happening. I see in the chat people are talking about T-Doc. T-Doc is interesting. Chris, I talked about how we did a video on your channel, I believe. Let me go to that one real quick. Is that your channel? We talked about it a while ago. Chris Patel, T-Doc. Yeah, Palantir versus Teladoc. It wasn't really Palantir versus Teladoc. It was more an analysis on Teladoc. But this was done March 20th, 2022. Me and Chris were talking about T-Doc. So you guys can check that out if you guys are interested in T-Doc, because, oh, sorry, I wasn't even showing that. Because it was interesting analysis on T-Doc. By the way, subscribe to Chris if you guys haven't subscribed to him. Really good Palantir content. Amazing, amazing stuff. We do a Palantir weekly podcast every week. This Friday we'll be doing another one. And we'll be discussing all things Palantir. All right, I think that's it, guys, for the morning open. It's been a fun morning. I got some videos to record, got some stuff to do. I was actually on spring break for the past 2 weeks. Now I am going back to my consulting job and work today, so I have to leave at about 1 o'clock. Again, if anyone's interested in being an early angel investor in my startup, amit@dailypalantir.com. You can email me. I can send you the pitch deck, get you some information. It will launch publicly in a crowdfund in the next couple weeks, but if anyone's interested, please let me know. I had a bunch of people reach out yesterday, which was awesome. Got to connect with people. And yeah, that's pretty much it. Hope you guys enjoy your day. It's Tuesday, plenty of time in the week to accomplish your goals. I will say something that I tweeted yesterday. Actually, no, I have to show this thing real quick before we leave. It's on Instagram. It's a Jordan Peterson quote. And I don't care what you think about Jordan Peterson or not, but this quote I really enjoyed seeing yesterday. Okay, here's the quote. Pursue your life's adventure. If you aim to climb uphill to the highest peak you can envision, that's better than happiness. When you listen to a profound piece of music that spans the whole emotional experience, it's not happy. Happy is elevator music. It lacks depth. It's shallow. That's the problem. It doesn't have that deep sense of awe and horror that characterizes the best music. To pursue your life's adventure is better than happiness. It's meaning and redemption. And maybe if you're lucky while you're pursuing it, you get to be happy. The reason I love this quote so much, and the reason I think it's relevant on a Tuesday, is because when you're pursuing your life's adventure, it's not supposed to be some, nice joyride of you going into the clouds and everything's okay and you don't have any stress. Pursuing your life's adventure, doing the shit you really want to do, is the hardest, most complicated thing in the world. You're likely going to have everyone doubting you. People are probably going to say you're not going to be able to do it. People are probably going to be shitting on you. All the obstacles and adversity and negativity is like just piloted your way. But if you still go to pursue whatever your adventure may be, and again, it's subjective for everyone, it is better than happiness. Happiness means nothing. Meaning means everything. And you only get meaning by continually chasing something every single day. And currently I'm on that chase. I hope a lot of you guys are on that chase as well. But keep chasing, right? Keep chasing. This is another week where you get a chance to chase. You're alive. And that means a lot to have the opportunity to even be able to chase. It's not about happiness. It's about meaning. And if you are pursuing meaning, something meaningful, and you get to have moments of happiness, that's great. But happiness means nothing without actually developing a life purpose and meaning around yourself. And that's how I choose to live my life. And doing these morning live streams is one form of my meaning, right? In a lot of other things that make up meaning in my life. And I'm so happy that 137 of you chose to be here on this live stream today. So thank you guys. Have a great week. I will see you later in today's videos if you check them out. And tomorrow, Monday morning, I'll see you then. Money Talks new episode should be out on the Sense Invest channel. I will see you tomorrow morning at 9:25 a.m. Have a good day.